Good evening, viewers. My name is Imran. I'm a UK and international tax specialist. Once again, I'm here with another interesting video. In this video, I will explain to you how a company can obtain relief for trading loss in the UK. This video is with illustration and example, which will help the viewers to understand the concept very well, and they can apply the knowledges in their exam and in practice. I suggest do not skip any part of this video because there are a lot of useful information. I have put some practical example from by using my own accountancy software, which will help you to understand this concept very well. So stay with me, do not skip any part of this video because it's very useful. After watching this video, you will definitely do well in your exam and in practice. Also, do not forget to subscribe to my channel because I will be making more interesting video on the UK taxation, financial reporting, financial management, and performance management. This topic is highly tested in ACCA, ACA, and CTA taxation exam. It is also helping viewers how you can work out relief for trading loss. This video is with illustration, which will make it very easy for the viewers to understand the concept. Let's begin. The trading profit or loss for corporation tax purpose is worked out by making the usual tax adjustment to the figure of profit and loss shown in your company financial account. To calculate a trading loss, you should include any capital allowances because this will reduce your profit, and any additional R&D relief because in the UK, if you have investment or you spend money on R&D, research and development, the HMRC would give you additional relief for that company. Eventually, you will pay less corporation tax. So don't forget to deduct capital allowances or make a claim for capital allowances and any R&D relief. Include any balancing charge, but the balancing charge will increase your profit. Do not include any losses or gain on disposal of fixed asset because gain on disposal of fixed asset will be taxed in a separate heading. This is called capital gain taxes. So include any certain annuity and charitable donation. I have also uploaded video on introduction to corporation tax. It's already uploaded on YouTube. You must watch this video. Also uploaded video on how to perform corporate tax computation. On capital allowances, I have uploaded like 3-4 videos on capital allowances. You must watch these videos as well to understand these topics. However, in this video, I will be explaining how a relief is available for trading loss for a company in the UK. Now, there are various options available. Number one, set against total profit in the current accounting period. So this is without limit. I mean, if the loss during the year is 1 million and then you have other income, for example, you have property income or business have property income and they have interest received, a capital gain, they can set the trading loss, the entire trading loss against the total profit in the same accounting period. So that is number one option. Carry back and use against total profit in the preceding 12 months. So what they're saying is, if there's a loss in the current accounting period, so you can carry back to the previous 12 months and set against the total profit of the previous 12 months. Loss made, there are certain rules as well. Loss made before or pre-April 2017, carry forward and set against next available future trading profit from the same trade. There is some restriction to pre-April or the loss before 1st of April 2017, which can be carried forward and set against the next available future trading profit only. I mean, you cannot set it against capital gain or any interest receivable or any property income. For example, if you have rental income, there's no restriction. A loss made post-April 2017, carry forward, you can carry forward that loss if arises after 1st of April 2017 and set against total profit of a later accounting period. So in this case, not only against trading profit, but you can set it against total profit. Total profit means income and gain before deducting qualifying charitable donation. Now, let's begin with illustration number 1. Sasan Limited has the following result for the year to 31st March 2023. They have trading loss of 700,000. However, apart from trading loss, they have income from the UK property business 210,000. They have chargeable gain of 150,000. They pay 10,000 to charity. So what you need to do is you need to add UK property business income to the chargeable gain. That would give you 360,000. That's how you work out a relief for the current accounting period. So how to use the current accounting period trading loss against the other income of the same accounting period. So that's the illustration. So they have total profit of 360,000. If you don't use, for example, in real life, when you're doing corporation tax, if you are a tax manager or you're an accountant and you're doing corporation tax, if you don't use it, automatically the tax software will calculate tax liability on £360,000. So you have to make some adjustment to utilize £360,000 of trading loss against the total profit of the year. So then in this case, you use the current year loss. As a result, no corporation tax is payable. It means there is no income for corporation tax purpose. So that's how you use the current year trading loss against other income. So it's very simple, very basic. In this case, what will happen to qualified charitable donation? They will be unrelieved, they will be wasted. Remember, qualified charitable donation, anything you haven't used, is going to be only used when there is a taxable profit. There's no taxable profit because it's covered by the losses of the year. So we have a trading loss. However, we had some income which is covered by the loss. Hence, no corporation tax is payable for 31st March 2023. So one final thing for illustration one, make sure you prepare a loss memorandum. Okay, so what will happen is the donation will be wasted unless they can be group relieved, because charitable donation can be group relieved. Okay, you have to remember this. Examiner, or you won't get this in tax tables. You have to remember this. The remaining unrelieved trading loss of 340,000 will be carried forward. So it means we use 360,000 worth of losses against the property income and chargeable gain. So the remaining 340,000 still left with the business, they can be carried forward and set against future profitability of Sasan Limited. So it's very simple. Now, another option for losses, to instead of carry it forward, you can make a claim to be offset against the profit for the earlier 12-month period, not the accounting period, before any qualifying charitable donation. What do you mean by 12 months, not the accounting period? It means that sometimes accounting period can be shorter than 12 months. So if it's shorter than 12 months, so take the whole months and then take some more months from the accounting period before the previous accounting period. So it will make it complete 12 months. So you are allowed to take these losses to be offset against the profit of earlier 12 months period, okay, not the accounting period, before any qualifying charitable donation. Now here is illustration number 2. Assume Sasan Limited has the following income the previous 12 months. So the year ended 31st March 2022. So remember illustration 1, we were dealing with Sasan Limited. So now we wish to carry Sasan Limited trading loss left and to be used against the previous 12 months. So in the previous 12 months, they had a trading profit of 100,000, UK property business income of 50,000. They pay a charity donation of 10,000. Calculate the company total taxable profit for the year ended 31st March 2022. Assume all appropriate claims are made. Claims made mean is that you made a claim to carry the losses backward to be set against the previous 12 months. Now, continuing with Sasan Limited, Sasan Limited has a trading loss of 700,000, which has been used in the same year, in the same accounting period. So a part has been used in the same accounting period against property income and capital gain. Now the company has intention to carry back the part left of the trading loss to be set against previous 12 months. So this is the example. So in the previous 12 months, the company has a trade profit of 100,000 and they have UK property business income of 50,000. So they had a total profit of 150,000. Sasan was still left with some trading loss, which has been unused. So we can choose 150,000 worth losses, trading loss to be set against previous 12 months. So losses carried back from 31st March 2023, 150,000. As a result, Sasan can have a tax relief, or they already pay corporation tax for the year ended 31st March 2022. So eventually HMRC would send Sasan a tax refund to their bank account or in the form of checks. Remember, in practice, this is just for exam. In practice, if you are an accountant or you're a tax advisor, when you're making a carryback claim, so you make sure that you make a claim first, and then on CT 600 form, there is a box called that this claim would affect the result for the previous accounting period. If you don't make such claim, or you do not click on that box, as a result, the company will not get any tax refund. So what will happen is you will have a carryback loss. You will carry back the losses. It will be just waste of the losses. There will be little losses left to be carry forward. So make sure when you carry back the losses, make sure you tell HMRC. There's a box on CT 600 form. What is CT 600 form? Is HMRC form. On that box, on that form, there is a box. You click on that box. You tell HMRC that you wish to carry back the losses, and this effect of this is that it will have impact on the previous 12 months. Eventually, they will pick up your case and they will issue tax refund to the company. So now we have utilized 150,000 losses. Remember, the Sasan has loss, a trading loss of left with 340,000. 150,000 pound has been carried back to the previous 12 months, and then eventually Sasan still left with 190,000 pound trading loss, which can be carried forward and set against future profitability. Now, there's a complication with the carryback losses. If you remember, we mentioned is, would you please know that the carryback loss is for full 12 months. It is not based on the accounting period. So if the previous accounting period is less than 12 months, you can carry back to the period before that one by applying time apportionment to the total profit of the previous period. So remember, in theory, yes. In practice, it's very hard, because the thing is, like, the tax software is not built for this purpose. The HMRC will not understand this one as well. So in practice, in theory, yes, we can say is cover the previous 12 months, and the previous accounting period is shorter than 12 months. But remember, in exam, you will be tested based on the theory. So you need to remember that if the previous accounting period is shorter than 12 months, so then you can pick some more months from the period before the previous accounting period. So that's very basic. However, as a complication arises, because based on in practice, practically you can just carry back to the previous accounting period. So that's how it's work. Now, on the previous slide, we saw that we dealt with how to use the current accounting period losses against other income of the same accounting period, and how to make a claim for carry back those losses and set against previous 12 months. Now, if you decided not to do any of those, so the losses can be carried forward. So a company can carry trading losses forward to deduct from the profit of future accounting period, as if the trade continue. Obviously, if the trade cease, there's no way that you can carry forward. On cessation, the losses will stop at the cessation date. So the carry forward losses, you can carry forward the losses as long as the trade continue. If a company is using a carry forward trading loss in an accounting period that ends before 1st of April 2017, they can only use the relief against the profit of the same trade, as we said on the previous slide. This restriction does not apply if the losses arises after 1st of April 2017. The losses arises after 1st of April 2017 can be set against total future total profit of the company. The losses arises before 1st of April 2017 can be used against profit of the same trade, against the trading profit of the same trade. So there is a restriction. No claim is required, as the relief is given automatically. What they're trying to say here is, because this relief is automatic, when you try to use the losses against the current accounting period, you have to make a claim. You have to make certain adjustment to your computation. In terms of carry back, again, you have to make adjustment. You need to pick up the losses, carry it back, and tell HMRC your intention that you making certain claim. When it's come to carry forward, if you don't touch these losses will be automatically carry forward. So it means that you don't have to do anything. Just don't tell HMRC if there is a loss in the current accounting period, this will be automatically carry forward. You don't have to do anything. You have to do something if you are using a part of the losses against the current accounting period profit. For example, if there's a trading loss in the accounting period, however, in addition to trading loss, the company has income from the property, interest income, capital gain, so you can use it against the current accounting period total profit. However, to do this, you have to make some adjustment into your tax computation. The same applies to if you're making or you carry back the losses to previous 12 months. So you need to make certain adjustment. If you don't do this adjustment, I will show you in a practical slide. I have taken some screenshot of the real tax software, then you will understand it much better. How does it work in practice? So no claim is required as the relief is given automatically. Now, when it's come to post-April 2017 losses, where a trading loss are incurred in accounting period beginning or after 1st of April 2017, or it's also called post 1st April 2017, provided the company still continue to trade and the trade does not become small or negligible, it means that still the trade still exists. During the year of the loss, the company may make a claim for trading loss brought forward to be used against the total profit of the next accounting period. Remember, if the losses arises before 1st of April 2017, they can be carried forward and set against the trading profit of the same trade. This restriction does not apply if the losses arises after in the accounting period after 1st of April 2017. They can be carried forward and set against the total profit. I mean, you can set against capital gain, any interest income, property income, and trading income as well. So there is no restriction on the losses post April 2017. Now, as we stated on the previous slide, that the losses can be carried forward and set against the total profit of the company if the losses arises post 1st April 2017. However, there is a restriction on the amount. The restriction is there are restriction on the total amount of the carry forward losses that they can be offset against the profit of the accounting period from 1st of April 2017. There were no such restriction existed in the past. However, the legislation introduced such restriction after 1st of April 2017. Overall, the amount can be relieved using the most type of carry forward losses, including carry forward trading losses incurred either, doesn't matter if they arises before 1st of April 17 or after 1st April 2017, is restricted broadly the amount of allowance up to 5 million. For example, if you have carry forward loss of 20 million, so then the restriction would apply. You can just bring it forward and set against the profit. However, the amount will be restricted to 5 million plus 50% of the remaining total profit after deduction of allowance. So you deduct the allowance first and then the 50% of the remaining total profit after deduction of allowance. So the 5 million maximum allowance is proportionately reduced for accounting period shorter than 12 months, and the 5 million will be also reduced for based on the number of group of companies in the accounting period. So you need to remember for the group of companies. However, I will be making a separate video how it's worked for a group relief. So in this video is just I'm discussing a company which is a standalone company or a single company. Now illustration 3 for restriction. So Belco has trading profit of 8 million for the year ended 31st March 2023. It has a trading losses brought forward of 8.5 million. It has no related 51% group company and no other income or losses in the accounting period. Calculate Belco total taxable profit for the year ended 31st March 2023. So this is the example. Here the restriction would apply because the brought forward losses are more than the 5 million. So remember the previous slide. So we will work out the restriction. It's just a basic formula. I will show it you on the following slide. Now, as you can see that the loss brought forward is more than 5 million, is 8.5 million. Then we have profit of 8 million. So the formula saying is, or the legislation state in this case, that the maximum loss available to relieve is made of the deduction allowance. So the deduction allowance of 5 million. So that is available. On top of that, plus 50% of the balance of unrelieved profit above 5 million. So in this case, so as set as below. So it means you cannot use 8.5 million because of the restriction. So because of the restriction, you are allowed to use 5 million plus the difference between 8 million profit minus 5 million, because the 5 million is the allowance as is stated by legislation, divided by 2. So that would give you 6.5 million. So you can use a 6.5 million worth losses against the current accounting period total profit. As a result, the total taxable profit will be only 2 million. Then the remaining loss of 2 million, because we out of 8.5 million loss, we use 6.5 million. So the remaining 2 million loss will be carried forward and will be set against future profitability. Because the restriction applied, because the losses here, the brought forward losses are more than 5 million. So if it's less than 5 million, so don't think of any restriction, just use it all. If it's more than 5 million, then the restriction would kick in, and there is the legislation clearly states. If you look at this wording, it's quite easy. The wording is saying is the maximum loss available to relieve is made of the deduction allowance. So there's a deduction allowance of 5 million plus 50% of the balance of unrelieved profit. So for example, out of 8 million, for 8 million, we use the loss of 5 million. So 3 million profit left, but still the legislation state is that we can still claim another 50% of the balance of unrelieved profit. So about the 5 million set limit. So 50% of, so that's the 3 million left of the total taxable profit. So take 50% of this, or you can do divide by 2. So another 1.5 million. So total losses can be used. So 5 million plus 1.5 million, 6.5 million. So in this case, we will have total taxable profit of 2 million. So we still got left, the company still got left with the 2 million worth of losses that can be carried forward and set against future profitability. This is the most complicated one, terminal loss relief. When a company ceases to trade, what will happen is when the company stops trading, then it can make a trading loss if there is a trading loss in the final accounting period. So that trading loss for the final 12 months can be carried back and used against total profit of the previous 3 years, so maximum 36 months, ending immediately before the start of the loss making period. So it means the final 12 months losses, if the business stopped trading or ceased to trade, what's happened is this is called cessation. If there is a loss in the final 12 months, that losses can be carried forward and used against the total profit of the previous 3 years or 36 months, and that ending immediately before the start of the loss making period. So I will show it to you with illustration. In practice, it's very hard. So when there is a cessation, and the tax software only allows you to carry the losses back to the previous 12 months. If this is the case, if that is a cessation time, so in this case, if you're making a terminal loss claim, you have to inform HMRC. You need to write to HMRC that you're making a terminal loss claim, and then in this case, the final 12 months accounting period loss can be used against the previous 36 months. So you need to remember in exam and in practice as well. So this illustration will help you to understand this, how the terminal loss relief works. So Gold Limited prepare accounts to 31st March each year, but cease to trade on 31st December 2022. The company results for the final 4 accounting period are, so remember, for the final accounting period, only 9 months long, so there is a loss of 100,000. If there would be a loss for the accounting period 31st March 2022, we can take 3 months losses as well, because if you have seen my previous video or the previous slides, it states that final 12 months. So remember, there's no loss for the accounting period 31st March 2022. So we will just deal with the losses for 31st December 2022 and carry back to the previous 3 years. So it's very simple. Now we can see from the slide that for the accounting period ended 31st of December 2022, there was a trading loss. Apart from trading loss, there's a capital gain and non-trading profit of 4,000 and 5,000. So the total, so in reality or in practice or in theory, you need to utilize trading loss against the current accounting period first. So in the current accounting period, we had other income of 9,000. So then use 9,000 worth of trading loss in priority against the current accounting period. So that is the rules. Then any losses left, take it to 31st March 2022. So in 31st March 2022, we have a trading profit of 20,000, non-trading profit of 2,000. So the total is 22,000. So any losses from 31st of December 2022, you take it back and use 22,000 worth of trading loss against the total profit of 31st March 2022. Then deal, if any loss is left, then deal with, so we can see there are losses left because the trading loss is 100,000. So 31st March 2021, so add the total profit. So we have trading profit of 30,000, then we have non-trading profit of 3,000, and then we have chargeable gain of 4,000. So the total is 40,000. So then use any losses left from 31st December 2022 against 31st March 2021. So you will use 40,000 and then come to the final. So the final is 31st March 2022. You will deal with this in the last stage. So then add the total profit. So the total profit is 42,000. However, we are left only with the trading loss left from 31st December. We use it against the current accounting period. Then we use a part of it against 31st March 2022. Then we use a part of the loss against 31st March 2021. We still left with 29,000 and we use it against 31st March 2020. So therefore, we use the final accounting period loss against the previous 3 years accounting profit. As a result, what's happened is when we're using the loss in 31st December 2022, you will lose charitable donation, or charitable donation will be wasted for 2022. For March 2022, the charitable donation will be wasted. And for 31st March 2021, the charitable donation will be wasted. However, for 2020, we are left with the trading profit of 13,000 and total taxable profit of 13,000. If there is a charitable donation, then you can use against the total taxable profit. Now we still continue with illustration number 4. So we had a trading loss of 100,000 for the 9 months ended 31st December 2022. We use 9,000 worth losses against the same accounting period total profit. Then we use 22,000 against 31st March 2022. Then we use 40,000 against 31st March 2021. And just finally left with 29,000. We set it against 31st March 2020. And finally, all the losses has been utilized. If there's any losses left, then this will be wasted. Remember, why I said it's wasted, because the company ceased trading, so they made a terminal loss claim, and then after making that loss, if there is still some trading loss left and hasn't been realized or there's no relief available, this will be wasted. So the illustration number 5 is, this is very important question. Jim Limited has the following results. So they had the year end 31st March 2021, 31st March 2022, 31st March 2022, and there's a trading profit for 31st March 2021 and 31st March 2022. For 31st March 2022, there was a trade loss of 150,000. For 31st March 2021, you can see there's a capital gain and there's a charitable donation. There's also a capital gain of 5,000 for 31st March 2022. There's a charitable donation as well, and there's for 2,000 worth of charitable donation for 31st March 2022. Show how a trade loss for 31st March 2022 will be relieved efficiently. Calculate any tax repayment due as a result of the tax loss. Assume that CT rate for all the period is 19%. So on the following slide, I will show you how to deal with this kind of question. Now, starting with illustration number 5, so we had a trading loss in 31st March 2022. So this will be used against the same accounting period total profit. In the same accounting period, there's a total profit, a chargeable gain of 5,000. So use 5,000 worth losses against the chargeable gain. As a result, the charitable donation will be wasted. So it means there's no corporation tax payable. However, the charitable donation will be wasted. So we had a total trading loss of 150,000. 5,000 has been used in the same accounting period. Then we carry back 130,000 worth losses and set against the total total taxable profit of the previous accounting period. So which is the previous accounting period total taxable profit is 130,000. So, and then we still left with 15,000, which has been carried forward and will be used against the total taxable profit of accounting period ended 31st March 2023. So in this case, the total taxable profit of 31st March 2023 is 60,000 reduced by 15,000 worth losses. And then because still we got 45,000 worth of income will be subject to corporation tax. Hence, we now can claim a relief for charitable donation. Because if there is no taxable profit, the charitable donation will be wasted. The charitable donation cannot be carried forward. In the last accounting period, remember the total taxable profit is 60,000. The brought forward losses is 15,000. We're still left with 45,000 taxed on the 45,000 pound total taxable profit. Hence, the charitable donation can be used against if there is a taxable profit. So there's a taxable profit of 45,000. We can use 2,000 pound worth donation of charity. So the remaining total taxable profit will be 43,500. So remember that is the loss memo. Trading loss for 31st March 2022, 150,000. 5,000 we use against 31st March 2022. 145,000 left, of which 130,000 has been carried forward against 31st March 2021. We still left with 15,000 which has been carried forward and used against total profit of 31st March 2023. I hope you understand. With illustration, you need to do plenty of practice to have a strong knowledge or to gain the strong knowledge of this topic. Now, to work out the tax refund, so for the accounting period ended 31st March 2021, because of the carryback provision, so we had a total taxable profit in that year. Obviously, we didn't know that we will have carryback losses, because as we talk about for 31st March 2021, you had a profit of 130,000. You obviously that time the charitable donation you made 4,000, so relief will be available. Because we're not aware of the result of 31st March 2022 what would happen. However, once you report this profit, so you will pay tax of so total taxable profit is 126,000. So in this one you pay tax of 23,940. Now what's happened is 31st March 2022 there was a loss, and then you carry back those losses against and set against the total profit of 31st March 2021. As a result, HMRC would send you a tax refund. So the tax refund will be calculated based on this scenario. So for accounting period that ended 31st March 2023, because we use 15,000 worth losses, and you will get a tax refund of 19%. So 19% at the rate of 15,000 multiplied by 19%, and you will get a tax refund for 31st March 2021 and for 31st March 2023. Now that's how the corporation tax look like in practice, in practical life. So if you look at the Schedule B, so this company has a loss. So the loss has been taken, this figure has been taken from the profit and loss statement of the company. So their company has a loss of 306,201 pound. However, in that loss, while calculating loss, if you have studied financial reporting or financial accounting, so in the profit and loss statement, we add back everything. For example, if you have rental income, we add it to profit and loss statement. If you have interest received, we have added to the profit and loss statement. If you have depreciation, other expenses, non-allowable expenses. However, for corporation tax purpose, you need to make this adjustment to calculate your trading profit or trading loss. So for example, if you would have a depreciation, this company does not have depreciation, you need to add back this depreciation. If this company would have charitable donation, make sure you make this adjustment. If this company would have some non-allowable expenses, for example, client entertainment, you need to add it back. And any capital expenses, however, I can show you the full length computation I will be making another video how to perform a full length computation in practice. So that is a practical example for you to understand the concept very well. So this company had a trading loss of 307,000. Now, if you want to use, or if the company does not want to use the trading loss against other income, so we have other income of this £1,485, which is the interest received. So what will happen is the HMRC would seek to tax this other income of £1,485. So you need to play with the software. You need to utilize some of the trading loss against other income. So you can look at the Schedule A. So we have interest or profit from non-trading loan relationship. It's also called interest income or interest expenses. Then we have set a trading loss of £1,485 against this. Hence, there is no taxable income, so the company will not pay any corporation tax. So that's how it's look like in practice. Now, that's how the loss summary look like in practice. So loss summary in practice is, look at these old columns and these boxes. So we have a column for losses arising before 1st of April 2017. So these losses can be carried forward and set against only trading profit of the same trade or profit from the same trade. There is another column. If you look at the second line, so we had the loss arising on or after 2017, to April 2017. This can be carried forward and set against total profit of the company, any total profit or future total profit of the business. And then we can see, if you look at the previous slides, so some of the trading loss we had set against the non-trading income. So we have the loss in the period of 307,686. If you do not take any action, so you have an option for that losses. So we have brought forward losses, we have current year losses, that's adding up together. So if you don't wish to utilize anything of these in the current year, or if you look at the box, there is an option to losses to carry back to the previous period. If there's a profit in the previous period, you can carry back these losses to the previous period. However, based on the information, you can see the company has a brought forward losses. It means the company is not profitable, or the company just is an investment business. Normally, investment business, they receive a dividend from their subsidiary and they pay off that dividend to the shareholder. Usually, there are not too much thing going on. So the people setting up investment business, especially large multinational company doing this thing, because it's not a trading company actually. So a trading company would look slightly different, because a trading company will have some profit. Investment company usually is in a vehicle or special purpose vehicle built for this purpose, so usually receiving any dividend. They have some management expenses, that have some interest income, they might have some rental income. So there are not a lot going on the investment business. So there is so we don't need to carry back these losses, and the losses are set against the group profit. So there's option you can carry to the group profit. However, that company is a standalone company, so there is no option available. Trading loss to carry forward arising before 1st of April 2017. So then we can see remember the losses brought forward before 1st of April 2017. That box, if you look at the top box, is empty. So the bottom box, the second last, will be also empty, and the trading loss to carry forward. So what we did is we have brought forward loss post April 2017, 790,312, and we have loss arises in the current accounting period. If you look at the previous slide, we have loss of 307,686. What we did out of this loss, we utilized 1,485. So use 790,312 plus 307,686 minus 1,485. If you look at the bottom figure, so that is whatever left that will be carried forward and set against future profitability. So that's how the things look in practice. That's why we're talking about an ACCA exam, the losses before 1st of April 2017. So that's a whole concept. Look at this, the practical slides, so you will know better now how the things work. So there's a carry back. So for carry back, you need to really put the figure. If you don't put the carry back figure, so the software will automatically carry forward. So that's what we're saying is for carry forward, there is no election needed. I mean, you don't have to do anything. This thing will be, the losses figure will be automatically carry forward. For the current year, you need to make election. What election mean is that you have intention to utilize. I mean, there's no such election that is like a government election. It's just clicking at that box that you wish to utilize that much losses against the current accounting period. You wish to do carry back the losses. So this one you need to fill the boxes, and then the software will understand, and then HMRC will understand. However, if you don't do this, the losses will be automatically carried forward. And finally, thanks for watching. I hope you found this video useful. Remember, once you have the knowledge, the examiner cannot trick you. I show it to you with a practical example. If you look at the previous two slides, very important. That's how the tax software works, and that's how the examiner would expect you as well. Because the purpose of you being ACCA or ACA, that you go in practice and you do everything by yourself, because you don't need further training. Or you need to train yourself or familiarize with yourself with the tax software. The rest you need to understand this knowledge, because in a professional or the work environment, the employer would expect you to know these things, because you can't ask this question. Yes, you can ask the tax manager this question. However, you might join a firm which is a small firm, and then they don't have any tax specialist, or they don't have ACCA qualified or ACA qualified. So all you need to do is familiarize yourself with the tax software, and the rest you need to apply your knowledge. You need to know how to deal with the losses arises before 1st of April 2017, how this carrybacks work, how to use the losses against the current accounting period total profit, as I showed you in the previous illustration, and with the help of the tax software example, which will make it very easy for you. There's no need for you to make any claim for carry forward, because the carry forward provision is automatic. So remember, once you have the knowledge, the examiner cannot trick you. You will also perform well in practice too. I'm not a tutor, I'm not an examiner. However, I'm a tax professional, I'm an accounting professional. My job is to teach you the method and to explain to you how it does work in theory and in practice. So do not forget to share and like this, and comments. Also hit the subscribe button, because I'll be making more useful videos like this to benefit you. I already uploaded plenty of video on exempt employment income, exempt benefit, taxable benefit, car benefit, provision of living accommodation, provision of beneficial loans, and also I have videos, 3-4 videos on capital allowances, introduction to UK corporate tax computation. This will benefit you, this will equip you fully, and then this will help you to prepare yourself for the practical life and also for your exam. Now it's time to wish you a very good night.